I've been day trading for over 7 years, and in this video, I'm going to share with you exactly how I would start my day trading career over again if I had to start from scratch. I use one simple trading system every day. It's incredibly simple and repeatable, but before learning it, I wasted thousands of hours along with thousands of dollars that I didn't need to had I known the information I know today. In this video, I'm going to teach you my simple way to start day trading from beginner to pro. I'll first start with what makes the foundation of any profitable trading strategy, a simple yet mechanical way to read the markets. Then I'll go over the exact tools I use to trade every single day, along with how I was able to build a strong trading psychology using my 3-step system I've developed over the last 7 years. Finally, a simple way to understand the math behind trading that can be really confusing in the beginning, as well as a complete course of the most important things that I know about technical analysis. Then to end the video, I'll show you how I built and tested my profitable trading strategies while showing you a real life trading example so you can see everything we talk about in real time. This video will be a full course on how to start day trading as an absolute beginner. I'm going to give you all the information that I've learned in the last 7 years and the same information that's allowed me to achieve results like this in my own trading. But before we start, one thing that's very important to mention is you may see a $100,000 P&L and think that you can get here quickly, but in reality, to achieve results like this, it took me 7 years. Trading is not a get-rich-quick business, but in this video, I'm going to explain all the rules, strategies, and lessons that I've learned in the last 7 years that help me achieve these results, so that way by the end of the video you'll have a clear path on how to start trading. So the goal of this video is by the end I will reveal exactly how I became a profitable trader after 7 years using one extremely simple system, and this way we can remove the guesswork out of trading and get rid of years of trial and error, because I'm going to explain all the trading lessons I've learned in the last 7 years in one video. So one of the main things we have to understand is why and how does a stock move. In this example here you can see a chart, but why is it moving? You see at this specific point we move all the way back down, but then randomly off of this level here we move all the way back up. So what is happening at these key levels that we don't know about, and why is it moving? There's one primary reason a stock will move, and that is the direct relationship between the sellers in a stock and the buyers on a stock. The price of the stock is solely determined on what buyers and sellers believe is a fair price for that stock. And therefore, as a trader, we have to identify where these buyers and sellers are sitting to capitalize off these moves. And the reason these moves happen is because there is, of course, supply and demand, just like the real world. For example, if you had 100 t-shirts, but nobody wanted to buy your t-shirts, well, now just to get rid of them, you have to reduce your price to get rid of your supply. The same concept works in trading. If no one wants to bring the stock price higher than this level, well, then sellers are going to step in and we're going to see a bigger move to the downside. However, if buyers step up and there is demand for a stock, then we'll move all the way back to the upside. And once again, when we get into the real examples in this video, this will make much more sense. But for us, the goal of our trading is to identify areas where we can capitalize on these moves. And when I show you my strategy a little bit later on in this video, you'll see how we can determine if buyers and sellers are stepping up and how we will actually be able to capitalize on these moves. But in theory, let's say we knew that there was demand at that key level and we entered the trade on that demand zone and we were able to ride this trade all the way up into this area. Well, how much money would we actually make? The math of trading can be very confusing, and that's why I'm going to simplify this for you. And later on in this video, when we're looking at real examples, I'll show you some tools on the real charts that can simplify this even further. However, let's say we bought when the stock was in the demand and the price was $100, and we sold up here when the price was $200. That means our purchase price is $100, our new price is $200, and we were able to capture the $100 increase that the stock had in this move to the upside. To calculate the profit, there is a very simple formula we can use. You have to take the quantity, which is the amount of shares or units you're trading, multiplied by the new price of the stock, which would be the $200, subtract the quantity you bought multiplied by the purchase price. Now, in this example, how would that that work? Well, let's assume we bought 100 shares at $100. This means our quantity is $100 for both sides, and we have to multiply the 200 new price, subtract the $100 purchase price that we had. This means when we sold the trade, we had $2,000, but when we bought the trade, we only bought the trade for $1,000. We end up with $1,000 in profit, and that's what we want to capture. We want to capture these moves in price to end up with the final result of profit. Yes, there will be losses on the way, but over a long period of time, this is what we're aiming for. Now, the reason we want to start trading is because let's say we're looking for profit on something like the S&P 500, which holds the top 500 companies in America. It's a very safe investment, but typically this investment yields about 8%. Now, let's say we were to enter this S&P trade here at this area of demand, and we were risking $100 on the daily time frame. Well, the amount of profit we can have all the way up back into these highs here would be around a 3R multiple, which means for risking $100 all the way back up into the high here, we would only make $300 of profit. Now, $300 of profit is really good, but if we zoom in, you can see we would have to enter this trade in April and sell it all the way in September to make this profit. So just to make $300, it would take us over 5 months risking that $100 of risk. However, here, if we go over to the 1 minute time frame, well, this is now just 1 day. So if we're risking that same $100 on this day and we're looking for that same 3R multiple for a move back up into high of day, well, now all of a sudden we made $300 in a single day rather than waiting 5 months. And this is the beauty of day trading. We are trying to capture these daily moves to the upside or to the downside, but rather than holding for months and months on end, we can actually capitalize on these moves in a shorter period of time. And when we're able to capture those daily movements, this is the goal of our trading. After 7 years, this is how simple my trading looks. And of course, all these messages have timestamps and we're taken live in front of hundreds of traders in the accelerator and traders lab where I live trade every single day. At 9:32 before the setup happened, I was looking for this pullback entry on Tesla, and you can see I drew out the annotations on my chart of exactly what I wanted to see. At 9:38, I entered the trade with clear profit target and stop loss, and at 9:45, I finished my trading day, and you can see Tesla hit high of day very nicely, and I was able to make almost $40,000 from this trade, from the system that I've built over the last 7 years of trading. And later in this video, I will teach you the exact strategy I use to capture this trade and trades like this trade on a consistent basis using the simple system that I trade every single day. Really quickly, I have a huge announcement. After 6 months of working hard every single day, I am finally happy to announce that I will be doing a live 3-day trading event for absolutely free. During this 3-day event, it will be filled with value and I will be revealing my full system on exactly how I trade. This is going to be an in-depth course alongside myself live trading so you can see how the system works in real time. I'm going to show my exact strategy and most importantly, my edge that I've developed over the last 7 years, which I have never shown publicly before, and this truly changed my trading. And on top of all of this, we will have live modules from 8-figure verified traders where you can ask them questions as well. And these traders are highly respected in the trading industry and they have never done anything like this before. So it will be filled with value. Now, this 3-day event will start September 28th and it will happen from the 28th, 29th, and 30th. It will be done virtually. So no matter where you are in the world, you can attend this event for absolutely free. And on top of all of this, if you sign up now using the link in the description, you will get 3 exclusive bonuses and content that I have never put out publicly, but holds tremendous value. Last time I did the Scarface Trade Summit almost 2 years ago, we had over 8,000 people show up live. This time will not only be bigger, but I will try to provide 10x more value than I did last time. Save your spot as seating will be limited, and let's get back into the video. First, let me show you the exact tools I use to trade every single day and how I use them very easily for my own trading. And unlike you may have seen on the internet, no, you do not need a Wall Street setup to start trading. You don't need 100 different monitors with a lot of complex strategies and indicators, but rather we want to focus on simple trading. And therefore, to start trading, all you need is 2 things. Number 1 is a broker and number 2 is a charting software. Once you have these 2 things set up, you can start trading. Now, I have full in-depth videos on how to set up your broker and charting software on my channel that I'm going to link in a playlist at the end of this video, so you can watch exactly how to set up both of these for free. But the charting software I use is TradingView, and the broker I use is Interactive Brokers. So let me show you exactly how my setup works and how we can simplify it. Okay, so here we are in Interactive Brokers. Both the links for Interactive Brokers and TradingView will be in the description, so you can click those and go right to the website. Once you get to the website, all you need to do is open the account and fund it. Once again, this is a regulated platform, so it's safe, but make sure to do your own research and due diligence as well. However, this is what I use, and I have a full tutorial on my channel on exactly how I set it up, and I'll link that video at the end of this video. And then here we are on TradingView. Once you create your account, all you have to do is click products and then super charts. This will load up all your charts, and now here you can see the actual charts. For the different time frames, we can click up here. The D stands for the 1 day chart. This is what I showed you earlier. The 1 minute is the 1 minute chart, and the 5 minute is of course the 5 minute chart. Right now we have the line chart on. However, if we want to change this, we can also go up here and click candles, and this is the regular candlestick chart. I'll explain exactly how we can read these candles much more clearly and precisely later in this video. However, if we want to trade something, all we have to do is come up here to the search tool, and this is where we can search for anything we want to trade. Now, let's say we want to trade Tesla. All we have to do is put in the ticker symbol TSLA, and this will pop up with the Tesla chart. And now we will be able to see the price on the right hand side, and we will be able to see the candlesticks forming in real time, so we can trade this on the real charts. And now it truly is that simple. We have our charts with TradingView, and we buy and sell with Interactive Brokers, which I have a full video on exactly how to set that up as well. So now that we know exactly how to set up the tools, let me show you a full fundamental technical analysis guide on how to start trading. So when we're looking at candlesticks, there is a bullish candle and there is a bearish candle. For the bullish candle, which is typically associated with the color green, all this means is we open up the stock around the bottom of the body, and this shaded area here is called the body, and we close the stock all the way up here. And what this means is that buyers brought the stock all the way up from the bottom of the body. Now, these high points and low points, these are called wicks. This is the lowest point that the stock came to on this candle, and this is the highest point that the stock came to. So the candle here is helping us visualize the interaction between buyers and sellers. And whenever you see a bullish candle, that means that buyers won and sellers lost. Vice versa, when you see a bearish candle, this means that sellers are taking control. And this is typically associated with the red candlestick. And the difference between a bullish and bearish candlestick is that it will open up at the high and it will close at the bottom. And this signifies that sellers are now trying to bring this down. However, it has the same high point and same low point as the bullish candle over here. And this simply means that at one point the stock was at this high and it was at this low, but we opened at the body high and we closed at the body low. Now, with this being said, there's a lot of different candles that traders look at, and it can be extremely overwhelming, especially as a new trader, to learn all of the different candles that there are in the markets. So let me go over some of my favorite ones, and these are the ones you should focus on, especially when it comes to entering a stock. If we are looking for a long position, which means we're looking to buy a stock, we want to focus on the green bullish candles, and we need to know what they're telling us. In this example, you can see that this candle has no lines or no wicks. A wick is once again this line that a candle would have. However, this one doesn't have it. We open at the bottom here and we close at the top here. This means that this is the most bullish candle and only buyers stepped up on this candle. And if you saw this candle using the strategy that I'm going to talk about later on in this video, this is a very high confirmation candle to look for a potential entry to the long side. Now, this doesn't mean that these wicks are bad. These wicks or lines can also help us see a story. In this one, you can see the bottom of the green candle is here, which means at one point sellers actually stepped up and moved this candle all the way to the downside. However, after this, buyers stepped up and brought it and closed it at the top of the candle. And this signifies to us that sellers and buyers did try to fight here, but buyers won and they overpowered sellers. And this is also a very strong bullish candle to focus in on. Vice versa for the bearish side, you can see we opened up the candle here and we closed it here. This means that only sellers were stepping in. Therefore, this would be a very good candle to focus for a move to the downside. And yes, you can make money even if the stock is moving to the downside. A lot of people don't understand that. And that's why learning the skill of trading is very important. No matter if we're in a bullish market or if we're in a recession, you can still make money if you learn the skill the right way. However, the second candle right here, very similar to the bullish example, we opened at the high of the body, we moved all the way up. However, seller stepped in and we closed it at the bottom. And therefore, this is a very good candle that we could be looking for a short position as well. Now, it's important to remember not every candlestick is the same. There is different time frames that we can be looking at candlesticks. So in this example here, you can see I shaded out this full one candle, and this is on the daily time frame. So I shaded out from the high to the low. This is the full candle, and as we can see, this is a very bullish candle. However, if we move over to the right here, we can see that this is the exact same stock and this is the exact same day. However, this is the full range of the candles. So we opened up here, we made that low, and then buyers stepped up and we closed the candle near these highs up here. So what this signifies is different time frames will give you different examples of the candlesticks. However, as we can see, the range of the high and low is still going to be the exact same. It's our job to determine the price action in between the range to actually capitalize on the movement. And that's where we need to have a proven and profitable strategy that I'll explain in this video. Now, when we're looking to see how the market's actually moving and how we can capitalize on different movements, we need to understand market structure. This is going to be very important. Now, there's truly only three ways a market can move. One is an uptrend, which is simply just the stock moving to the upside. The second one is going to be sideways or range action. This simply means that we have equal highs up here and equal lows at the bottom. Finally, we have the downtrend, and this simply means that the stock is moving to the downside. Now, how are we able to simplify how to see the different types of trend? Well, in this example here, most people can identify that this is an uptrend. And we see this because every single time we come for a low, we create a high, then the next low is higher than the previous low. So there's a low here. This is called a higher low above that, higher low above that. Similar, when we see a high, we then create another higher high above this high, and of course another higher high. We can simply mark out a trend line here, and we can see that this uptrend continued until it broke right here. So we were creating higher highs and higher lows until we broke right here. Now, this doesn't mean that we instantly switch and we look to sell the stock. No, we now need to see what happened to break the trend. And if I zoom in on this example, you can see we broke the trend, sellers stepped in on the daily candles, showing that weak price action that we talked about. And now when we finally get another pullback here, you can see that sellers stepped in on this pullback for another low, creating a lower low. So now we created a low, we created another lower low, we have a high up here, equal highs. This high is the same level as this high, but then we break the low again. So now for this low, when we come back on this pullback, this would be an entry that we could look for a move back into that low. And if we did potentially take that, you can see we would have profited very nicely. So in the most simple way, this is how to identify the uptrend and the break of the uptrend. For the downtrend, now all we have to do is the exact opposite. So we're going to mark out lower highs of the downtrend, and you can see this downtrend actually ended up breaking to the upside right here. We then pulled back. This is a nice pullback entry that we could have potentially entered for a move back all the way up into all-time highs, as we can see here. So in the most simple way possible, this is how we're going to look at market structure, and we can look at market structure on different time frames: daily time frame, the 5-minute time frame, or the 1-minute time frame. But now that I've explained that, let's get into the most important part of the video. So now that we've gotten everything else in this video covered, let's go over the full trading strategy that I use every single day to trade in the markets, and then I'll show you real examples of me using the strategy in the real market, so you'll be able to understand exactly how I trade in real time. Now, there's so many different strategies in the market that you can choose from. You have supply and demand, you have support and resistance, you have smart money concept traders, indicator traders. So how do you choose? Well, for myself, I like to keep my trading extremely simple. And therefore, what I'm going to teach you today is one simple and proven strategy that I use to trade for about 90 minutes a day. The best part about this strategy is you're not going to require any daily bias, you're not going to require indicators, and there's no guesswork because it is one repeatable and rules-based strategy that I use on a consistent basis. And this strategy consists of the break and retest strategy. What this means is we're waiting for a stock to break above its previous resistance and come back for support. We would enter in on the level of support, looking for a move to the upside if this was a bullish example. And once again, I'll show you the bearish examples when we look at the actual examples. The reason the strategy works is because previously this line right here was resistance, which means that sellers were trying to bring the stock down. However, when buyers finally bring it back above the resistance, this means that buyers are now overpowering sellers, similar to how I explained with the price action candlesticks, and therefore this resistance now should turn into support. This is where buyers need to hold the stock back above. In our market structure example, this is what I explained, and therefore we would be looking for a move back to the upside off of this retest level. And for me, I can simplify the break and retest even further because what I use is the first candle strategy. And this strategy is not complex because I truly believe that simplicity does equal profitability if you can trade it in the right way. So let me explain exactly how I trade this. So for the first candle strategy, I trade the New York session open. What this means is I trade 9:30 a.m. Eastern every single day. Right at the 9:30 a.m. Eastern candle, I'm going to be marking out the first candle that develops on the day. To do this, I have 3 steps. Step number 1, I mark out the high and low of the opening candle. Now, the opening candle that we will be looking for is going to be on the 5-minute time frame. So we're going to mark out the 5-minute high and the 5-minute low of the first candle. And once again, that's going to be at 9:30 a.m. Eastern. So this candle that would develop from 9:30 a.m. to 9:35 a.m. And once the candle develops, I am now waiting for a break to either the upside or a break to the downside. In this example, we can see that we have a clear break to the upside, which means I would be looking for a move back to high of day. However, I cannot just enter in on the breakout. I need the stock to come back for a retest. On this retest, what I'm going to be doing is looking at the 5-minute high because we're already above it, but I will also mark out the down close candle. So when we're moving to the upside, the highest down close candle I see, I will mark that candle out. Now, the reason I mark out the down close candle is because this is where previously sellers were. And now I know that we broke above the resistance and therefore the buyers are going to overpower the sellers. So when we come back for the retest of not only the 5-minute high, but this down close candle, this is where buyers need to step up for a move back up into high of day. And therefore this is going to give us the highest probability entry. And to make this clear, for the uptrend, we're going to wait for the down close candle because this holds price for a move to the upside, because we know if it comes back to retest, this is where buyers need to step up. And for the downtrend, when we look at those examples, we're going to wait for the up close candle to hold price for a move to the downside, because the up close candle previously was where buyers were stepping in. However, if we assume we're in the 5-minute range and we broke below, well, that up close candle now is where sellers need to overpower buyers for a potential move back down for low of day. And just to make this very clear for you, you can see in an uptrend, when we have that down close candle, we're looking for the retest of that down close candle for a move to the upside. And for the downside, when we have that up close candle, we're looking for the retest of the up close candle for a move to the downside. And once again, if this doesn't make complete sense to you just yet, don't worry. When we get into the examples, this will make much more sense. And finally, for step 3, to actually enter the stock, we go to the 1-minute time frame and look for an entry on the 1 candle rule. So here we have our 5-minute high and we have our 5-minute low. And you can see we broke above the 5-minute high right here. We came back to retest, and when we retest this level, we are retesting with the highest down close candle. As you can see here, we already have that shaded, and you can see this was a bullish green candle, which means buyers stepped up, and therefore we would enter the trade here looking for a move back up into high of day. And you can see this trade would have worked out very nicely for that move back up into high of day. So with all of this being said, now I want to show you live trading examples with everything we've talked about in this video, and this way you can see how I implement all these lessons in my own trading, but in real time. Okay, so here we are on our first example, and I want you to see exactly how the strategy works in real time and how I implement it in the real markets. So like I explained the strategy, we waited for the 9:30 a.m. open here. We then wait for the first 5-minute candle. Of course, we're on the 1-minute time frame, therefore 1, 2, 3, 4, 5. We wait for 5 minutes to develop, and then we mark out the high and the low of the first 5 5-minute candle. Now what we're going to look for is a break either above the 5-minute high or a break below the 5-minute low. Let's see which way this stock ends up breaking. And in this example, we can see that this one actually broke that 5-minute low and we're seeing weak price action. So what we're going to do now is in the 5-minute range, we're going to mark out this up close candle. And what we want the stock to do is retest not only this 5-minute low, but potentially even this up close candle, because remember the up close candle is what's going to support price for a move to the downside. And we're going to look for weak price action near this level. Let's see exactly what happens when sellers step in. And as we can see here, buyer stepped in, but then seller stepped in right off of that 5-minute low plus that one candle rule. And now we're seeing even weaker price action on this next red candle. So how would I enter this trade? To enter this trade, we would look for a short position here. Our stop loss can simply be a break above the green candle right here. And our profit target needs to be at least a 2R multiple. This means if we were to risk $100 up here, we would make $200 of profit down there. So we're risking about $1,290 on this trade to make $2,440. Let's see exactly how this trade works. And you can see just like that, we were able to enter into a short position here and exit our trade here. We were done in less than 30 minutes of the stock market opening by understanding the simple strategy. And once again, I trade this strategy live every single day in the Accelerator and Traders Lab in front of hundreds of traders. And in there, not only do I explain the strategy more in depth, but I show you how to execute it in real time because I'm executing it in real time in front of you. With this being said, this is one example, but now let's go over to the bullish examples so you can see exactly how I execute a buy position. Okay, so here we are on our last example on Tesla, and what we're gonna do is play out the first 5 minutes. And once we play out the first 5 minutes, we can simply mark out the high and low. Now we know all we need is a break to either the downside or to the upside. In this example here, you can see when we break to the downside, buyer step up, there's no retest because this is consolidation. So one thing that's very important to mention is you need to break below and then come back for the retest. There's not a clear break on this stock to the downside. Once again, if you want more examples of this strategy, I have a full playlist that you can watch after this video of this exact strategy. With this being said though, you can see here buyers step up above the 5-minute high, and now we are retesting on the 5-minute high plus the one candle rule. So like I said, for the uptrend, we're going to mark out that down close candle, and you can see that buyers stepped up very nicely right off this key level, along with strong price action for a move to the upside. So this is where we can look to take that long position on Tesla. Our stop loss can simply be a break of the one candle rule, and our profit target in this example can be high of day, as that gives us a 2.33 risk to reward trade. And if we enter this trade here, we're risking about $960 for about $1,870 of profit. So let's see exactly how this trade works. And just like that, we were able to execute this simple trade by understanding all the concepts that I've talked about in this video. Now, if you haven't already, make sure to sign up for the 3-day live free event where I'll be revealing everything and going into depth about what it truly takes to become a profitable trader, all my systems that I've learned in the last 7 years of trading. Make sure to sign up for the event as spots will be limited. And if you want more information on any of the topics that I covered today, make sure to click the video on screen now. It's a full 10-hour playlist going over strategy, psychology, market structure, and much more. If this video helped you, make sure to leave it a like. If you have any questions, put it in the comments down below. Make sure to subscribe to the channel, follow me on Instagram and Twitter for more education, and I will see you next week with a brand new video.